Good evening, traders. Good evening. I trust you are well. I trust you are having a fantastic evening thus far. So, what I plan to do over the course of the evening is just to run through a lovely backtest over the course of May, June, and July. Simply because, you know what, we are coming close towards the end of the second financial quarter. You know what, we're going to be beginning now or start transitioning into our third financial quarter. And I just want to go through a lovely breakdown on how exactly we've performed using our Asian range break in the retest. So I'd like to go through this, and I hope you all would spend the time necessary just to go ahead with me on this journey on how we are going to practice and exactly how I utilize this method day in and day out. As you would know, we use this method every single day, normally in the morning, but sometimes we do have some positions that we do, take over the course of the afternoon. So with that out of the way, let's run right into the 1st of May. And as you can see, I know that over the course of May we had a lovely profitable month. Over the course of June, not so much. July wasn't bad in the slightest. So let's go into this. And as you can see, we have our Sydney session boxed out right over there. And of course at 4 a.m. that's when that candle closes, and we're looking potentially for price to have a run all the way up to the upside. Going to place a lovely buy opportunity over there, and your take profit was hit. There was quite a nice move towards the upside over there, and for the sake of time I won't go through exactly what happened, what fundamental news even actually occurred at this time in the evening, simply because it would take too long for me to delve into each and every single individual fundamental that occurs, because of course ultimately the movement of the market is not based on the price action, but it's actually based on what is happening within that country's economy. So with that being that, I'm going to go into the 2nd of May, and as you can see, a lovely take profit over there. Again, our risk to reward is only a 1-to-1 risk to reward. We don't go any higher than that, simply due to the fact that that's the way this method was built. It wasn't built for us to catch a decent risk to reward on our positions. So yeah, that's unfortunately that way. Of course, as you would know, there are quite a few methods as well that we do have that allow us to trade a bigger risk to reward, and thus earn a lot more based on one position that we find ourselves taking. So again, that was unfortunately a stop loss. As you can see, it was quite a massive trade, but that's alright. It does happen. It does happen this one as well from the looks of it. Another stop loss there, and then over there, as you can see, this lovely move to the downside. That was a take profit over there. It does look a bit messy, but of course you will see the profitability over the course of the trades that have been taken. So yes, I'm just going to go through all of these. Right over there. Another buy opportunity over here. Okay, let's get that one running. That buy was around there. It's a buy. That's a buy there. It's a 1-to-1. That's a 1-to-1. As you can see, some of these positions have been held over the course of a few days, simply due to a lack of liquidity and volume. Price does tend to move in a particular fashion, so as a result, that is only normal. That's so close, but not yet. Just going to extend that. That was a buy. That was a stop loss as well. That was a buy over there. Really unfortunate in that regard. Yeah. Very unfortunate. Long wick just took us out right there. On this candle closure, this is where your buy opportunity would have occurred, because as you can see, only on the candle closure do we find ourselves actually placing that buy. So that happened over there, and that's alright. You have another buy opportunity over here. Just a lot of buys. Ran all the way up. Another sell opportunity. So occurred around there. So yeah, so as you can see, I mean, the simplicity of the method is a selling point. This is the reason as to why we utilize the method, is because of its simplicity and its ability for us to implement it day in and day out. So when it comes down to that, when it comes down to the simplicity of the method, that is what you want ultimately, especially when you find yourselves not having a certain amount of experience within the financial market. If this is your first time trading, you want to stick with a simple method, and once that method has been mastered, then you can start to move ahead and go towards something that's perhaps a bit more complicated, but you'll be able to effectively implement it due to the experience that you've garnered over the years as time goes on. Ultimately, it's not necessarily about, you know what, it's not about how good you are as a trader. It's a matter of, can you follow your rules day in and day out, and there isn't any better way to to learn that skill than by implementing a simple method that you have to apply, that you have to follow the rules, and as you follow the rules, you'll realize that it works, and you'll realize that you can be a profitable trader by trading according to the rules. So the discipline aspect is far more important. Arguably, I have a hot take on this, where I believe that it's not actually about your emotions. It's about, are you able to follow your rules? Are you disciplined? Regardless of how you may feel in that regard, if you can follow your rules no matter what, then you'll be a profitable trader in the long run. Okay, so I'm hopping over. I'm still in May. I've almost hit June. I think this might be, when is June? June is going to be around there. Okay, it's not too bad. So you can see over there, got that. That's clean. I think this one was a break there. If I was a break there, that's definitely a very tight 1-to-1. But again, if you entered in any later, actually if you entered in later, you still would have gotten a decent entry coming close to 5 AM. But if you entered any time after that, then unfortunately for you, you would have hit a lovely stop loss over there. But okay, that is that. I have another method I'm going to end up showing you very soon. And when I say very soon, I mean tonight. I plan to show it to you. It's quite a lovely method. I'm going to find myself trading that one and just taking it from there. It'll be absolutely fantastic. So over here it's June. Okay, so I just passed June. That was June. Right. Let's go back and have an overview on how exactly did we perform over the course of May. So over the course of May, I'm going to find myself writing down exactly the amount of take profits we've hit, as well as the amount of stop losses we, and as a result, because it's a 1-to-1 risk to reward, it'll be very easy to calculate our profit margin or our profitability over the course of May. So over here, I'm going to go over here. That's one. I'll start with the take profits. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. That is 15, 16, 17, 18. It's about 18. Take profits in total. And that's 1, 2, 1, 2, 3, 4, 5, 5, 6, 7, and that's 7. Okay, I won't calculate. I won't count that in as well. 7, so it'll be 6. That's 18 take profits and 6 stop losses. I think you just take 18 minus 6. That's 12 positions that you have that were profitable. That's 12 positions that were profitable. You can even say, you know what, maybe on 2 of them I made a mistake. You can say that's 10 positions that have been profitable. If your risk was maybe 5% per trade, of course that's then a 50% profit margin. If it was 2% per trade, that's 20% on the account over the course of May. Let's go to June, and here we are at June, and I'm just going to go ahead and have a look. How do we perform over the course of June? Over the course of June, we had started off unfortunately with a lovely stop loss over there, but that's alright. The stop loss over here. So let's take profit again. I believe June was more of a break-even month. In fact, you may have ended off June at a little bit of a loss, maybe a loss by 1 or 2 trades. That's alright. Of course, once again, coming off the back end of May, you wouldn't have felt that too much. And then July came in and made up the loss once again. But we will go through that, and I'll show you exactly how all that panned out. So there we go. That's alright. Here we go over here. This was a sell. Yeah, it was about a sell over there. It broke right back up. It broke above there. Perfect. And price ran all the way up towards the upside. The only downside about methods that are time sensitive is the fact that if you miss it, or if you are perhaps an hour late, then you compromise the risk to reward, and with that compromisation, you can end up running a risk to reward of 1 to 0.9 or even 0.8 sometimes, if you were to respect the original risk on the position. So that is one of the unfortunate realities of time-based models, but again, they also provide the simplicity that discretionary type trading systems will not provide you. So that's the trade-offs that you do find yourself receiving from time-based models. With that being the case, I think we're on the 18th of June at the moment. Even with that being on the 18th of June, we're halfway through the month, and as you can see, we haven't had the best run through with take profits. You know, we've been hitting TP, hitting SL, and it's just been a back and forth all the time. That happens over the course of a few months in the year. It does happen, however, overall, we do find ourselves running a net positive. So over here was a buy. Unfortunately, this consolidation, I remember this one. Oh, this was not nice. And that occurred over there. This was, I believe, a sell. Yeah, we broke it around. If we broke it on that candle, oh, we didn't. If we broke this box on this candle, that would have been an immediate stop loss over there. Fortunately for us, we did not, and we only broke it on this candle. So that was quite clean. Pretty choppy price action over the course of this day, but that's alright. It's rather nice. Let's move that there. There we go. Stop loss hit over here, unfortunately. I need to move that to make it neat. Stop loss hit over here. That's alright. And yes, I do believe at some point you will get desensitized to the fact that you hit stop loss, once you know that this method performs, at the end of the day it will perform, um, even if you go through quite a few stop losses, you don't feel the effect of it to a large degree. Yeah, you just don't. But okay, let's take profit. Yeah, this was a very unfortunate one, but we had to take it because it wasn't that large. If you think of the overall amount of pips you were risking, it's only about 40 odd pips. I think when that box is over 80 pips, and normally that occurs when it's AUD CPI, and the box reaches over 80 to even 100 pips at a time, that's when you can say, okay, I'm not going to take my position over here because I'll be holding this as a swing trade. If you're risking 100 pips on one position that you're supposed to be out of the position by the end of the day. So yeah, that's just one of the tips I can provide. I think I have mentioned this before, quite sure I did, but yeah. Okay, this was a nice long opportunity. Well, how long? That's only 35 pips, not too bad. Only 35. Pip calculation is based on you have to remove that final digit, so it's 35 pips in total, 35.3 when you do your calculations. Yeah, you normally don't add in that final pip at the end. And over here was a bar, so stop loss. Oh, it was quite an immediate stop loss. There wasn't even time for you to at least have the trade run, but that was just another one. Immediate stop loss. Broke below and broke above. And finally we change direction. Okay, this is more in July, so I'll just find myself stopping over here. Where can I stop? I'll stop out there. Let's just use it. Okay, I need to stop here. Right, so this one needs to stop. Oh, no, this take profit, sorry. Apologies, I thought that was a sell, that was a buy actually. That one eventually take profit, but after holding it till Wednesday afternoon. Rather unfortunate, but anyways, let's go through June and let's see the profitability over the course of the month. Right, so over here in June, let's see. 3rd of June, that was stop loss. I'm gonna count without take profits first, as always. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 take profits. That's not bad. Let me count this again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Alright, that's 11 take profits. It's not half bad. Stop loss, that's 1, 2, 3, 4, 5, 6, 7, 8, and 8 stop losses. 11 and 8, 19 trades. 1, 2, 3. Alright, well, June is a shorter month as compared to May and July. So as a result, there would be less days that you'll be able to trade, but that, yeah, does make sense. So you can say it was a profitable month by 3 trades. Again, I do like to at least give a 3 trade drawback in that regard. And the reason why I say a 3 trade drawback is because there are times where you may not actually enter in the position on time, and as a result, you'll be compromising your risk to reward. That does occur. It's not. You know what? We aren't robots. It does happen. There are times where we just oversleep. Perhaps we forget that our alert has gone off on trading view, and it can occur. So I like to give at least 3 trades where I could have won, but I lost. 2 or 3 around about there, because I think if you're slipping up more than 3 times in a month, you know, that's something for concern. And you obviously have to rethink, am I actually taking this seriously or not? So yeah, that does occur at times. As you can see over here, I do have July, and we can begin on the 1st of July. And right there, we started off with another stop loss. So that was 1, 2, and a final take profit over there. Let's continue from that point. So over here, as you can see, I have 1, 2. I'm gonna just block this one here, place it there, place it there. Lovely take profit. Looking at Friday, the 5th of July, unfortunately for us, there was a stop loss. I believe that would have been NFP as a result. Actually, not. I lie. Apologies. Looking at this, we threw wicks to the downside and wicks to the upside. We only closed after NFP at 5 p.m. as a long position. So that's not bad at all. That's actually quite wonderful. Wow. There we go. I think I did post this one in the group if you do remember. But yeah, over there that occurred. I'm looking at Sydney. Over there we hit a lovely stop loss there. That's quite unfortunate. What happens? Again, consolidation after NFP. Looking at this opportunity over here. We did close below. And I think spread would have taken you out in this regard. Yeah. Well, overall you were taken out. So it doesn't really matter with regard to spread. But okay. Here we go. Here we have another opportunity. Another lovely buy. I think we were taken out by spread again. Now we are definitely taken out by that wick. Yeah, that wick would have taken us out. If you survive that wick somehow, perhaps you place your stop loss a few pips below, then you would have been fine. But in reality, that's a stop loss. Spread would have definitely have taken you, even if there was a few pips below. And that does depend on the broker as well, but in general, that would have been out. This was a lovely buy, just like that. Just like that. Awesome stuff. Continuing on to Sydney. Oh, why do I always say Sydney? Continuing on to the next trade. This would have been a stop loss, unfortunately. Very close, but not close enough. This opportunity over here, this was definitely a take profit. Over there. No, it wasn't. Oh no. I'm quite sure I closed in the profit on this trade. I must just double check in the group. But I'm quite sure we did. I think we may have had a better entry. But I know we definitely did. But okay, it'll be a stop loss. For the fact that we are following our rules. And this is a back test in that regard. So over there, as you can see, how to take profit. This over here would have been a buy there. Right there, let's make this look neater. Lovely bar over here as well. There we go. Here we are again. A sell. This was of course this lovely famous bear run that we just had. That's quite nice. Lovely bear run. Let's place another one over here. The sell. Place one over here. So of course, as you may have noticed, this method works amazingly well in a trending market. So yeah, that's fantastic. The only downside is that the market is not going to trend every single day. So of course you will have our days of amazing profitability, and we'll also have our days of non-profitability and giving back to the market. That's right. I hate saying it like that, but yeah, there will be days where we lose our money. But as long as we are right in the long run, or rather above 50% in this regard, then we will be alright. So I'm looking at this, and that was the sell over the course of, actually we closed here, but if you're looking at this in accordance with how we should trade, then you would still be in this position. Today was a stop loss. If you look carefully at the buy, we did break above, as you can see at candle. It did close above the box. So there was a stop loss. We are still in that sell opportunity, in that sell position. So we should see price run all the way to the downside. We'll see as time goes on. Right, now comes the fun part of calculating how much positions we won and how much we lost. So let's have a look. Over here we started off the month with stop losses. We're going to start with our take profits as we always do. It's 1, 2, 3. That is 4, 5, 6, 7, 8, 9, 10. That's 10 take profits. And stop losses we have 1, 2. That's a 3. It's 1, 2, 3, 4, 5. Yes, that's a 5. 6, 7, 8, 9, 10. That is 11. And we are still in this position. So that's 10 take profits, 11 stop losses. Yeah, that's over the course of this month. I feel as though I counted incorrectly. I'm quite sure we hit a lot more take profits. I was going to double check that. Let's do that. That's what? 1, 2, 3. That's a 4. That's a 5. No, that's correct. 5, 6, 7, 8, 9, 10. Yeah, no, it is correct. It would have been 11 take profits, 11 stop losses, but okay. It is 11 and 10. So theoretically speaking, we are in a negative of, say, around 1 position, maybe 2. But yeah, that is where we're at. Overall, over the course of May, June, and July, we are in a profit. We are running a net positive. Coming off the back end of our first quarter being break even, basically. So yeah, it's quite good for the time being. I think that if you were to go to any, how can I say, any forex provider running a net positive using such a basic method of trading, I think that's a plus. I think it's fantastic. Yeah, it's not, I mean, arguably I would say that I'm not entirely impressed with the performance. I think we can do a lot better, but once again, we have a whole 2 quarters left in the year. So I think running our first net positive, our first net profit on our second quarter for the year, I think that's amazing. So as time goes on, we will update. We'll see how has things been, how things gone over the course of the year. The previous 5 years have been profitable. First of all, there have been a few negative months. However, over the course of the past 5 years, you've seen only profit, and that's what's important at the end of the day. It's not more so about over the course of the month are we profitable. We have to look at this from a long-term perspective. We are not in this to make some money for the next 3 years. We are in this to make some money over the course of the next 5 to 10 years. So the method that we utilize cannot be a seasonal strategy. It has to be a method that can stand the test of time, and that is the Asian range break and retest. That's that for this lovely back test. I think it was awesome. If you want more of these, let me know. If you want more of these, let me know exactly what you would like in that regard. You know, tell me what type of videos you want to see. Do you want to see more live trading? do you want to see? What exactly would you like to see that would enhance your trading experience? Because ultimately that's the reason why I make these videos. I want you to be able to go ahead and see how exactly I trade and then replicate that within your own trading, so that ultimately you can become a profitable trader. But yeah, aside from that, I hope you all have a wonderful evening further. Keep well, keep safe, and I'll catch you in the next one. Cheers.